And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3%. Of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November.
That's a scenario I don't really think a lot of people are even considering right now. Whereas 57% for Bitcoin dominance was always a level we talked about it potentially going down to, because that's exactly where it went to, on this trend line the last couple of years.
The air on Wall Street turned electric as markets tumbled and panic spread across trading floors. The VIX, often called the market's fear gauge, spiked more than 31% in a single session, its sharpest jump in months. Stocks sold off across the board, with the S&P 500 slipping below key support levels before clawing back slightly. But history has a strange way of rewarding panic. Sudden volatility spikes like this have often preceded short-term rebounds, suggesting that the chaos shaking investors could soon give way to opportunity. Tom Lee sees the sell-off as less of a collapse and more of a reset. He notes that CEO confidence has been dragging under the Federal Reserve's relentless tightening cycle, with the ISM Manufacturing Index stuck below 50 for over 30 months, the longest drought on record. To Lee, that fear spike wasn't just noise, it was a pressure valve releasing. He believes the S&P 500 could climb by nearly 200 points by mid-November as markets digest the worst and reposition for recovery. Meanwhile, Ben Cowen is watching the crypto charts. He thinks the shift in sentiment is pushing Bitcoin back into dominance, with its share of the total market stabilizing around 57%. In his view, as risk drains out of altcoins and money seeks stability, Bitcoin might once again become the market's anchor in the storm. Stay tuned as we bring you more clips from Tom Lee's explosive interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
In fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the 39th highest ever one-day surge. And the 1-month median return is almost 3% of the 38 other instances. So I think the S&P could add, 200 points between today and mid-November. I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines. There is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today. There has always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that thinks it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
Markets are still reeling from one of their sharpest jolts of the year. On Friday, the S&P 500 tumbled about 2.7%, while the Nasdaq sank nearly 3.6%. Wiping out weeks of cautious optimism in just a few trading hours. The CBOE Volatility Index, better known as the VIX, spiked roughly 32% to above 21, its highest level in months. By Monday morning, futures hinted at recovery, but the mood remained uncertain. For some, it looked like the start of a correction. For others, it was a violent reset that could clear the path for a more stable rally later in the quarter. The market's nervousness is not just about equities. Crypto traders faced a brutal liquidation wave that erased nearly $19 billion in leveraged positions within 24 hours. Perpetual futures and altcoins were hit hardest, while Bitcoin held comparatively firm. The carnage revealed just how much hidden leverage still lingers beneath the surface of digital assets and how easily it can spill over into broader markets when volatility spikes. In many ways, the crypto sell-off served as a parallel warning to the equity slump. Speculation is still running hot, and risk remains mispriced. Whether this moment turns into a rebound or a deeper drawdown will depend on the next few weeks of data. If inflation readings continue to cool and the Federal Reserve hints at easing by early 2026, equities could regain their footing. But if yields stay sticky and confidence keeps slipping, last week's crash might only be the opening act of a far rougher finale. As Tom Lee points to a brewing rebound in traditional markets, Ben Cowen sees a different kind of rotation unfolding in crypto. While equities brace for recovery, Cowen notes that capital is quietly flowing back to Bitcoin, echoing Lee's belief that confidence always returns to strength first. Let's watch more clips from his interview.
I will say with something like Bitcoin dominance that we've talked about a lot, one of the things we mentioned was that it would likely find a low in September and then build off of that low, and that dominance should go up for basically all of October after forming a low in September. Now, what's really interesting is that just about every week, someone's reaching out and saying, well, what about Bitcoin dominance? Like they feel like it's not going up. But it is, right? Like it is. And, if you look at it right now, about a month ago, the week of September 8th, dominance was at 57%. Now, it's the week of October 6th. So about a month ago, right? Now, a month later, we're now at 59%. So dominance is going up, right? It is moving higher. We are seeing alts, that liquidity in the altcoin market. We are seeing it go back to Bitcoin. It's happening. It's just not obvious to people yet. But I think the rotation's already underway. There are times where it takes a little while, right? I mean, people are like, well, you said dominance would find a low in September. You said it would go up in October. And I'm like, guys, that's what's happening. There's the narrative that, you're potentially being fed. And then there's what's actually happening, right? And dominance has found a low in September, and it's been moving higher. And, if you go back and look at other years where we've had similar types of moves, 2020, we've made the comparisons to 2020 for Bitcoin. And one of the reasons for that is just kind of this idea of a capitulation low, up, sideways, sideways and then down into the bull market where it's been 2 weeks up, 2 weeks down, and then you break through in October, right? That's the same thing that's happened this year. You have your capitulation low, you go up, sideways, up 2 weeks, down 2 weeks, and then you break through in October. It's really similar. And when you look at what Bitcoin dominance did back in 2020, it was around these same levels. In fact, the week of October 5th, Bitcoin dominance opened the week at 59.35%. The week of October 6th, Bitcoin dominance opened the week at 59.31%. So it's basically the exact same level today as it was exactly 5 years ago. And it took a little while. I mean, back then you can see that dominance found a low here, the same time frame, and then it started slowly moving up. No one really believed that it was, right? It felt like, people were still calling for alt season. And then before we knew it, once we got into mid-October, maybe about a week and a half from now, that's when Bitcoin dominance shot a lot higher, right? And in 1 week, it went from 60% to 62.5%. So I think it's relevant to remember that, it might not feel like the rotation is happening. Like, it might not feel like it is, but it is. And if you go look at altcoins on their Bitcoin pairs, like, you can see that they found a high in September. And in 2020, you can see that alt Bitcoin pairs were about the same level as they are today. October of 2020, alt Bitcoin pairs were at the same level. And some people are like, well, how could they go down and then still get another move up? I mean, look at the chart, right? I mean, in 2020, they had this massive drop into early November, and then they got a bounce. And then they had another drop into December, and then they got another bounce, right? And even in 2017, alt Bitcoin pairs rallied on up. And, the week of October 9th in October of 2017, alt Bitcoin pairs were at the same level that they're at today on October 10th. And back then, alt Bitcoin pairs still dropped from 0.4, which is where they are right now, all the way down to 0.25. And then they rallied, and then they dropped again to 0.27 in early December. Again, as a reminder, when you go look at monthly returns of Bitcoin dominance, what you'll see, as we've covered, is that October is the best month usually. And we've only just begun. And so you have to remember that there's plenty of time in October for dominance to head a lot higher. Okay? And when you look at where dominance opened the month in October of 2020, it opened the month at 59.12%. Where did we open up at October 2025? 59.03. So they both opened the month at 59%. And then 2020 October dominance ended at the month 64%. All right? In October of 2017, dominance went from 54 to 64. 54 to 64. So at the end of October 2017 and the end of October 2020, Bitcoin dominance found itself at 64%. So we have to remember, in order for the bull market to continue, liquidity must flow to the king. Okay? Ethereum does not lead the bull market. Solana does not lead the bull market. BNB does not lead the bull market. None of those things lead the bull market. Bitcoin leads the bull market. And if Bitcoin ever stops leading the bull market, then the cycle's in the final innings. Usually by the time you get an alt season, the cycle's over, right? So you might have a month or so. So basically the people that keep calling for alt season keep calling for the end of the cycle.
The winds in crypto are shifting again. After months of sideways grind and scattered altcoin rallies, the tide is quietly rolling back toward Bitcoin. The rotation isn't flashy or loud. It's slow, steady, and statistical. Bitcoin's dominance has climbed from around 57% in early September to roughly 59% by the first week of October. That 2-point rise may not sound dramatic, but in crypto terms, it's a massive statement. Liquidity is leaving the side streets and returning to the main highway. Altcoins, once the darlings of speculative capital, are starting to bleed against the king once more. It's not the first time this has happened. The same setup played out in 2020, almost to the week. Back then, Bitcoin dominance sat near 59% in early October, before surging to 64% by month's end, a rally that signaled the start of Bitcoin's explosive run to $60,000. In 2017, the pattern was eerily similar. Altcoins pumped, sentiment peaked, and just as traders began chanting alt season, Bitcoin reclaimed the throne, dragging dominance from 54 to 64%. Markets rarely repeat, but they do rhyme, and right now, the rhythm feels familiar. Every cycle teaches the same lesson. Bitcoin leads, everything else follows. When liquidity tightens, investors stop chasing stories and seek strength. Ethereum, Solana, and BNB all have their moments, but none of them start the bull market. Bitcoin does. Altcoins might see brief bursts, but until the apex asset completes its dominance phase, alt season is just a mirage. October has historically been the best performing month for Bitcoin's market share, and this one looks poised to repeat that pattern. For traders hoping for the next 100x meme coin run, it may feel disappointing. But Bitcoin dominance rising isn't a bearish omen, it's a sign of capital consolidation before the next leg higher. In every major cycle, dominance surges first, liquidity stabilizes, and then the real bull market begins. History doesn't guarantee outcomes, but it whispers truths to those willing to listen. The rotation back to Bitcoin isn't coming, it's already here. As we wrap up, are you buying the dip in stocks or stacking more Bitcoin while dominance rises? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.